Welcome to the LuxAlgo tutorial, Part 1, Price Action Concepts. In this module, we'll master market structure, liquidity, and order blocks. These concepts are the foundation for professional quant trading. By the end of this course, you will understand the fundamentals of price action concepts and why traders often prefer them over classical indicators. Identify market structure shifts such as CHoCH and BOS. Apply order blocks, liquidity, and imbalance concepts. Recognize automated chart pattern detection. And finally, build actionable PAC-based trade setups. Price action concepts focus purely on raw price data. Unlike classical technical indicators, PAC avoids lag, noise, and complexity. This style of trading is often called smart money concepts. It's built around swing highs, swing lows, and overall market structure, giving us a clean, accurate view of the market. Market structure is at the core of PAC. A break of structure, or BOS, happens when price makes a new higher high or lower low. A change of character, or CHoCH, signals a reversal after sweeping a pivot high or low. And CHoCH Plus gives extra confirmation after forming a new higher low or lower high. LuxAlgo automatically detects these events in real time, so you never miss key shifts in trend. Market structure tells us whether we're seeing a continuation or a reversal. CHoCH means a reversal. BOS means continuation. LuxAlgo distinguishes between short-term internal structure and long-term swing structure, letting you analyze multiple time frames with precision. There are two types of CHoCH. Leading CHoCH has no prior signs of reversal. It's the earliest clue. Supported CHoCH Plus, however, requires confirmation, such as a failed higher high or lower low. Together, these signals help us identify trend shifts with confidence. A break of structure confirms trend continuation after a CHoCH. A bullish BOS signals a new higher high. A bearish BOS signals a new lower low. These often occur in succession, marking strong ongoing trends. Order blocks highlight areas where institutions accumulate orders. A bullish order block is support near swing lows. A bearish order block is resistance near swing highs. The market also seeks liquidity, whether through trendline liquidity, chart pattern liquidity, or liquidity grabs. Fair value gaps and balanced price ranges expose inefficiencies in price. Premium and discount zones help us optimize risk and reward. Here's our first PAC trade setup. We combine order blocks with swing and internal market structure, then add trendline liquidity zones to anticipate strong impulses and breakouts. This approach captures high probability reversals and continuations. In our second PAC setup, we combine fair value gaps, pattern detection, liquidity grabs, and order blocks. This multi-layered approach lets us find precise entry zones where liquidity and institutional levels align. To recap, always start by identifying market structure, BOS or CHoCH, across both long and short time frames. Locate order blocks for support and resistance. Confirm liquidity zones and imbalances. Check premium and discount zones for ideal entry points. And plan your targets, stop loss, and take profit levels in advance. PAC is about trading raw price action, not lagging indicators. Combine these features for consistent, high-probability setups.